Good evening, everyone. From around the world, you've got Shaun Downey and Jeremy King coming to you from the UK and Australia. We're just going to run through the major markets this week. Thanks for joining us. Got Shaun on the line. Shaun, how you doing?
Yep, pretty good, pretty good. Heat wave over, sort of like back to the land of the living. So good.
Awesome. So pretty critical point in time. We're just chatting. Shaun and I were just chatting before that 4 months since many markets have moved above their bullish levels, and when I look at the E-mini and when I look at the Dow, that's certainly the case. And even gold is now into the fourth month without taking out the monthly bullish. So in time, we expect something to be happening pretty shortly. So we're going to take about half an hour tonight. We'll keep it pretty quick. We'll run through equities, bonds, currencies, and many hot stocks that are there, and a little bit of sector analysis from Shaun. And we'll obviously cover off on oil and precious metals as well. Don't forget to jump on our YouTube site here, it's the Trading Safely YouTube site, and don't forget to subscribe below to the videos, and that way you'll get live alerts as and when we put the videos up. So we might just start with E-mini. E-mini's 4 months without taking out the monthly bullish. So that's these little pink lines at the top. We've been unable to close over those now for four months, and we're also at this sort of critical first up standard deviation at the quarterly time frame as well. And typically in a bull market, you'd like to be able to close over that. And as it stands, we're making a range around on the E-mini futures. So what we can say about the E-mini is that we haven't had major resistance move to the top as of yet. There is some early indications that we're getting a little bit of weakness at the weekly level, but it's certainly not convincing. So we've got rising supports across time. You can see that these quarterly and monthly levels are all sort of underpriced at the moment. So, John, what's your views on the S&P?
Well, it's a bit range bound. I mean, the thing that's happened over the last 2 weeks is we held the short-term supports that I put out there every day. So we held 24.16 to the tick, or I think it went one tick below. And then this week we had 24.28. And that was the low to the tick, and it held one tick above it on Friday. So we're sort of holding the nearest supports. So there's no indication of a breakdown at the moment, but not a lot of impetus. When you look at the NASDAQ as well, FANG, they're all pretty range bound. They've been trapped all week. Amazon topped out at its final resistance to the tick as well, but the others, we're waiting a break. The NASDAQ is actually very, very condensed. So on the short-term levels, there's only about, I think, I'll just check. I think there's only about 30 points between the short-term resistance and support. And quite often you can have a gap of, 100. I mean, earlier on in the week, it was 160. And now it's down to 35. So I think it's an important week. We've got the end of the month, end of the semi-annual. So I think it's pretty important where we finish, and that's going to give us some clues.
Yeah, I mean, for me, I'd like to see the S&P up closing above 2463 to be maintain this sort of bullish breakout. I'm fine with this sort of consolidation, but it's got to get on with it. And equally to the downside, obviously support down here at 2384, and then you've got this closing sort of quarterly zone and semi-annual zone at sort of that 2357 where we bounced out of last time. So in the short term, the market has to get on with it. It needs to take out some of these final resistances, and there's some early indication, and that's all it is, that there's some weakness building, but by no means is it compelling. So there's no evidence to suggest getting short just yet. But you do need to be wary if you're looking to get into it, or you've got fresh positions on the long side. So any other thoughts on the E-mini?
No, I think that's pretty much it.
All right, well, I'll just go over to the Dow Cash. It's going to tell a pretty similar story, so I might just comment on that briefly, and then we'll move over to the Aussie market.
Yeah, just while that's coming up, one thing on the index is the FTSE hasn't been really getting any benefit from the weaker pound. And 73.15 is a very, very important level. That was the original breakout point. We've got close to it during the week, but that is a reference point. We closed at 73.66, but just on my domestic market, if it closes below there, it'd be in trouble.
Okay, here's Dow's similar again. So last 4 months, unable to take out bullish levels. It's had a go at it here and failed. So we're in what we call a slingshot mode. That's these little pink dots and these little white dots. When that sort of condition lights up, it's warning us that there's potential for the market to go down. And to avoid those sort of conditions, the market needs to break out and close above it. But there is signs of weakness right here, so we are paying attention closely. It's the same as the other indexes. We've not seen some of these key resistances sort of move up above price. Like we'd like to see this yellow line sort of move up and then go across price. It just hasn't happened yet. So until that happens, we question any weakness in the Dow. But look, the critical levels in the short term are this 21,136 and the 21,000 zone, and then obviously breaking into 20,800 on a weekly basis opens up some of these lower monthly levels. Literally, the line in the sand for me, at least, is down here at last year's close, which is 19,750 odd. So once again, just be mindful of your long positions. Fresh positions here are probably questionable until we get a bit more evidence, and certainly the end of the month should bring that information. Shaun?
Yeah, I think you're fine on that one. Might just have a quick look at the Nasdaq because that's slightly different.
The futures? Okay.
Yeah, futures is fine. Yeah.
Okay, here we go.
Right, so you had the normal thing that happens in the modern market where everyone heads for the exit on the same day, and then there's no follow through, and it just starts drifting back up again. But there is some damage there, and also that weekly's moved to the top, hasn't it? Which is not a surprise with that big range.
Yeah, and it also opens up all the way down here too, which is 535750. So. Like a retest up here at 58.85 and a failure there. If we get another one of these little red dots happening at this line here, that would be a pretty good place to get a short signal because there's some gaps opening up in the downside here. But let's just see what happens. Right now, we're at last month's close is acting as resistance as it usually does. You can see here just how strong the monthly close is. In each time frame, actually, the closes are critical. So, yeah, I mean, we've got no signal to act on just yet in the Nasdaq, but there is some evidence of an opportunity potentially from the short side if we get a sell signal up at resistance at 588525.
Yeah, just a thing on sectors. Semiconductors have been leading the way. Actually, if you do SOX, S.SOXX, semiconductors have been leading the way with telecoms for a few months now, and they have gone, I would say, about 80% to 90% through what is the typical topping process that I like to see. And the semiconductors dropped as a sector this week from 2 down to 10, I think it was. So what's been leading the market is losing its energy, and then you have to look at what's taking over. Telecoms is still there, but what's taken over is actually computer games. Which doesn't really make me feel warm and fuzzy. If you think about semiconductors, that's a huge industry, global implications. Computer games, it's a sort of seasonal run up. They quite often get on a bit of a run, assuming what their Christmas sales are going to be, even though we're only in May, June. So you think about what's going to take over, and at the moment, there isn't anything obvious, or what is taking over isn't particularly powerful in my mind. But you can just see stocks, yeah. So again, we had everyone head for the exit on the same day. If if you compare that to the Nasdaq, the actual rally is not as good as what the Nasdaq has done, and so that implies some inherent weakness. And so we're going to be watching some of the stocks within that sector. I know Skyworks is one, SWKS. If that makes a close below 101, which it hasn't done yet, that would be in trouble. Close up. So some changes in the sectors.
I'll just call up the local Australian 200 for our Australian members. Aussie market obviously made new highs. It's busted out of an 8-year consolidation from the 2007 rally. So the broader trend on the Aussie market is still bullish despite the recent move down. It's just a correction, a broader uptrend as yet. Really, to get a breakdown in the Australian market, you need to see it under here, under 52.95 at the end of a month on a closing basis. But until then, this is just a corrective move. And really, at the moment, we've got last year's close acting as major support. And for me, really, you'd be looking at a monthly close under this low to open up and test it a bit lower. So that low there is 56.29. So if we close the month under that, then yeah, the Aussie market can probably test all the way down to 5,300 odd. That said, we've recently formed some weekly support down here, and we've back tested last month's close, which is those little pink crosses. So there is a little bit of strength forming. What's concerning a little bit to me is the fact that we've got this quarter's midpoint, this year's midpoint, and this month's midpoint, all just sitting above price. So now the Aussie market's got to effectively bust back up through this 5,800 zone to avoid weakness. And really, when you get that sort of scenario, you just look to the nearest high. So we'd like to see the Aussie market back over this sort of 58.27 level to move higher. So really range bound for the Aussie. You're looking at this recent high and this recent low in the simplest of terms. So 56.30 by 58.30. That's your range. A monthly close above or below that will probably tell you where we're going next. Broader trends up. So without further ado, I might just jump over to oil, because oil's a really interesting place. We've noted continually that the volatility from oil falling from massive heights has led to ongoing volatility even today. And we're getting big ranges, but without substantially changing the trend. And we've been having these swings from $54 down to 42, and it hasn't changed the monthly trend yet on a closing basis. So maybe this is the first month. But to me, we've now come all the way down here to our quarterly bearish, and we've held it. And in fact, we've got a couple of buy signals coming through, and now we've got some daily support forming under price. The other thing to note here is that we've got a weekly positive slingshot forming, so that's the potential for the market to go up. Now, to confirm all of this, we obviously want to see the market trading higher, and in the short term, I'd like to see it above 43.55, which is last week's midpoint at the end of the month, for oil to keep moving higher or come out of this corrective mode. And everyone's pretty bearish oil at the moment, so any move up from here could be pretty vicious. Initial support resistances come in at 44.68, with the weekly levels up here at 46.47. So for me, it's a stand aside and just let the market sort out what it wants to do this week. Let's just see where it closes, because that's going to give you some information probably for the next few months. So there's no need to really rush into an oil trade when we've got so much information coming at the end of this week. Shaun, have you got any other insights on oil?
Well, the main thing on the shorter time frames, the half day, quarter day, all that stuff, all moved to the bottom of trend on Wednesday. So the support point at 42.05 is pretty strong. There's actually a zone from 42.50 to 42.05. We've got all those higher time frame levels in the mid 44s, and the short term resistance is 44.20. So got to close above 45, then I think it could really rock. But there is quite a bit overhead. But sentiment is very bearish on oil for whatever reason.
Well, I'm just going to add in some of those short-term studies that you're talking about.
I think the other thing is looking at oil stocks. A lot of oil stocks are not making new lows, so the oil price is dropping. And some of the ETFs, XOP, sort of had a buy signal on Friday, but not a support. We've held that position in Conoco, and it's slightly up. That position's nearly 2 weeks old, so oil has dropped a lot, and Conoco has actually gone up slightly. So there's a few things there.
Yeah, what's interesting here, I think this is what Shaun is talking about for anyone that's watching. These supports dropped under price, but then what's different with this pattern compared to the others is that you've now got rising supports.
Yeah, short-term ones. They're the 120s and 240s moved up.
Yeah, so for anyone new that's watching, these are all. So if I add in the cursor box, where are you? Here we go. So here you go. We're covering 120, 240, 360, 480, and 720 minute support and resistance, and the short terms are now rising. So it's got work to do, oil, to get back above that sort of 43.50 area at the end of this week, and if that happens, then strap yourself in for a bit of a violent reaction back up, because last year we actually closed the year on a bullish footing, and I'll show you how that is. 1 second, if I just go back to the daily chart and we add in some of these yearly pivots. Okay, so the yearly pivots are the orange ones, and this is standard. Okay. Yeah, so in the standard, here we go. That was the yearly bullish right there, and we closed all the way up here. So we did close bullish last year, and this is a critical point for oil. If it can hang on to this zone, then you can expect a fairly harsh reaction to the upside. So good opportunity there. We'll keep everyone up to date on that this week. Where to next, Shaun? Should we go through currencies?
Do you want to get gold? Might as well stick with commodities.
Yeah, okay. Gold's been interesting. 1297 high all the way down to a circa 1240 low. That was last month's midpoint. It's held that midpoint, and then just sort of late on Thursday, Friday, it's put in a corrective move back up to a volume profile resistance point into the sort of early 1270s, and then closed back all the way back down. It was a bit of quite a volatile day in the end. Just looking at gold sort of structurally, there's a couple of things going on in my mind. For gold to move higher here, it definitely needs to take out this monthly, to this pink line here. It needs to take out that monthly closing level there at the end of the month, and that would be a base level of bullishness for me. But really, the key bullish scenario is a monthly close over this high here. So in the short term, like this week, coming into the end of the week for the bulls, I'd like to see above this 1278.5 as a minimum, and a stronger outcome would be closing above this high. If that was the case, we'd be looking to test into the early 1300s, up here around 1325. That said, to the downside, on the downside, look, we don't have any signals at the moment. We did have a short recommendation on all the way down here, and we got out of that above 1256 on Thursday. So now we're waiting for another divergence-based signal or a timing signal. But so far we don't have one. But look, for anyone that is short, the downside, you probably want to see it start taking out 1241 on a closing basis, followed by 1227, and then this important key low here at 1214. A weekly close under that, and gold can fall a long way, particularly down here to 1152, which is last year's close. So, look, we do think the broader trend in gold is switching around to the upside at the yearly time frame, but a lot can happen in between. And right now, we are sitting on the sidelines waiting for a bit more evidence. But the bullish scenario is above 1280, and the bearish scenario, for an immediate bearish reaction down, you want to see it close under 1214. So right now, when we look at where we are, we're actually just sitting here in the middle of the trap. We're trapped in the middle of the distribution, and when that happens, it's like not a good place to be trading, because it implies statistically that the market can move freely around that midpoint. So just be careful here and just be patient. Looking at next month, at the midpoint analysis, down underneath here, this is the mean reversion process. You can see we've got this monthly and quarterly midpoints right around where we are. And so the price is to fall under here into the next month, then obviously it's going to have a lot of weight on top of it. But equally, if it can spike up this week and take out these levels, then it's going to open up a bit of space to the upside. So just for me, it's a stand aside and let the market tell you what it's going to do, and then we'll reassess when the market pulls back and test support after the breakout, whatever that breakout is. So, Shaun?
Yeah, I think that's fine. Yep, just wait and see. We're in the middle.
Silver's a little bit the same. It's got a huge zone between 1720 and 1740. Basically, where you've got quarterly and yearly timeframes coming together, it's acting as a distribution midpoint, much the same as this concept here that I just raised then. So I think off the top of my head, the bullish scenario for silver was 1774, and the bearish was, actually I might even just pull up the Slack site. So yes, weekly close over 1774, and on the downside, really you've got, I'm sure there's a level. I might just jump in here. Look. Okay, there's a minor level here, minor level at 1630, and a major level at 1596. Yeah, interesting to note that we are in a positive slingshot mode, so that's giving potential stored energy to the upside. So be careful if you're short here, and keep an eye on your stops. Okay, currencies.
Yep.
So pound US dollar. It's been quite volatile last week. Broke down on the week and has sort of tested back into resistance a couple of times. We'd moved our stop down twice. I think the last final stop was 127.22, and we closed at 127.19. So we're actually still in this trade. It's making it pretty difficult to pound, but we're going to look at it structurally here. Here's this quarter's midpoint right here, and here's this month's midpoint. So we're in a congested zone here. It's not going anywhere in a big hurry. Really, in my mind, if we close the day above this 1.278, that would probably indicate that we're going back to test this high. So if you are short, obviously we'll be out over our stop tomorrow, but if you remain short, this is definitely a line in the sand at 12780, and to see weakness, we'd really like to see it take out this 1.2630 and then have a crack at 1.2373. So we do like to get short the pound where we can, and for me, obviously I'm wrong and the bulls are right. If it closes the month back above 1.2953, and then it can go higher up to this sort of 135 zone, which is, if I put in the yearly levels, there's a yearly level there, and that's a pretty important one. Shaun, any other insights?
Just on the short term, we're unbelievably condensed. So the range is 127.23 to 126.90. So ridiculously narrow, actually. So it feels like tomorrow's pretty important. We're either going to, I think we're going to be stopped, or it's going to, start going in our favour a lot more. We're not going to keep those ranges. News-wise, obviously being in England, I'm pretty close to it. there's not much going on, I don't think. You know,
So it's interesting, right on the last hour of
okay.
the day, so it's closed back under.
Yeah.
So let's see, folks. We're certainly not going to be hanging around for this gap up here, so we'll be keeping it pretty tight tomorrow. But we do like to pound down for longer term, and that is why we're under this key level 1.2953. Above that on a monthly basis, no longer bearish. Okay, Euro. Let's go to the futures. So Euro, we mentioned the Euro a couple of weeks back. Well, this whole time, the key weekly resistance hadn't formed. Resistance hadn't moved over price, so therefore we suspected that, we were questioning how strong the breakdown was in the euro, and certainly it hasn't been a strong breakdown, even though we've had, this weekly, we've had some initial signs of weakness. We haven't had follow-up signs, so. I think we had an exit on a short position at 11240, and it went through that on Friday. So I think the bullish scenario is pretty clear for the euro. It really needs to sort of take out this high around this sort of into this zone at least by the end of the week. If it was to fail right here, then you'd be looking for immediate weakness to the downside again. And certainly this is a pretty key level there at 111450. So for me, I'm going to wait until the end of the week and see what, perhaps we get a sell signal up at this resistance and a failure. That would be something to have a go at. But I'm certainly mindful of, if the euro does break up here and has another pop higher, you better be ready for that one too. So I think the line in the sand is, over this into the 113 area. If we close the month in there, then you've got to be prepared for it to move higher again, possibly be heading into the 115 and 116 zone. So, Shaun, any other thoughts there?
Yeah, I'm just checking the levels a lot higher up. Just bear with me. Yeah, you got a spot. You got 116.17, so that's a long way higher.
Yeah, I've got one here, 116.
And on the futures, there's 120.26. So I think people who follow me know my view on the euro. You never sell weakness on it. You've got to try and see whether you can pick a top. But for me, the levels, they're a long, long way away. Sentiment is almost permanently bearish of the euro, which is another reason why you can get these vicious rallies. So if we have a monthly close that's bullish, then I think it could go quite a bit higher.
Yeah, I mean, that's right. One of the things I'm sort of also cognizant here is this quarterly level here where we dropped under. That gave the support, and that has opened up, gave this rally permission. But we're coming into the equivalent level on the upside here at 114. So for me, we are at the end of the quarter. If we're not over this level here, then I'm sort of struggling a bit with the euro, come to think of it. So it's a critical week to watch. I think for me, I'm not. I'm going to wait here and wait till we get to the end of the month and just see what it's delivered, because we could be not far from reversing at the quarterly level, knowing these indicators. So let's just wait and see on that one. Aussie dollar. I've been trapped for quite a while. The key level for the Aussie dollar is 0.7837. If you've got a monthly close above that, then it can dip all the way up to 0.95. But it's failed there 3 times and is now back testing. Here's the level I'm talking about. Yeah, so it's had 2 goes at it and now having a third. So we're short at the moment. This is a pretty critical area in the short term for the Aussie. I'd be wrong with a monthly close over 0.7659. That said, we do have like a weekly slingshot down mode, so that's providing impetus or the potential for the Aussie to go down. Really, with our short position that we got on now, we'd be wrong on a daily close over 76.24. That's a stop, and the market will accelerate on a daily close under 75.33, and that really opens up this sort of, there's quite a powerful zone in here. There's this year's midpoint, and there's a couple of weekly levels and last month's close. So that's like a really really big zone in there. That's sort of 7.7434 to 7.746. But through that, you're then talking about last year's close and lower. So yeah, so short term still bearish, and we're wrong above this 7624. What else is there? Better look at US dollar yen. US dollar yen's been trapped in sidewoods for the last sort of couple of weeks. It's a little bit like gold, or like a lot of markets. Everything's been in sidewoods, so not a great time to be trading in the middle of a distribution. But for me, there's a couple of warning signs here. One is this one. We've got this monthly slingshot mode. So what does that mean? Well, it means that this pink bearish pivot is underneath the quarterly bearish pivot. And when that happens, you get this potential for markets to slingshot back the other way. So when I see that, and then I see this rising weekly support, it doesn't make me feel too bearish about the yen. But happy to be wrong, but really on the close below 110.334. To me, clearly the move up to the upside is a monthly close over this high, and that will open up 113 and then 115. So I'd like to see this week close above this high and then look to get long. Now to the downside is obviously it's pretty clear line in the sand. If we close under there on a monthly basis, then there's a car crash coming for the yen all the way down to here. So once again, I'm on the sidelines with the yen until perhaps we get a continuation buy signal on a close above this daily resistance. That would be something I'd probably look at from the buy side with a rising weekly support. But that's my view on it. Sean, what do you reckon?
Yeah, I'm not particularly interested in the yen at the moment. It's bang smack in the middle, so I think you leave it alone, really.
Yeah. Let's have a quick look at the dollar index. Okay. Let's see what that's saying. Okay. Well, there's some preliminary support. Let me just add a study here. Yeah, so we've not had any qualified support drop. We've had some initial signs of some recovery, but it's still at risk, a bit like the euro. The risks to the downside are still there. There's quite a strong support down here at 0.9466. We'd like to see the market close above basically this range here on a monthly basis or even a weekly basis to really open up, moves higher. Bigger picture, still think the dollar's going up. We're down at the lower annual target right now, so it's not within the realms of reality that we do get a final spike low that creates the energy for the dollar index to go higher. And look, in the short term, I'd like to see it close above 97.51, but obviously very mindful of any close under that low. So not really any permission to act on the dollar index just yet. So stay tuned there. What are the markets, Sean?
Well, there's a few stocks on our hit list, so we might as well go through them. The first one, when we're looking at fashionable and unfashionable, so we'll start with the fashionable. If you type in LEN, L-E-N, this is a home builder, and they had their results recently. And when we're in a topping process, home building went up to sector number 4 at one point. I think it's 5 at the moment. What we're looking for is when it becomes crowded trade is they come out, their results are great, and the price goes down.
Do you want to share your screen?
Yeah, I can do. Hold on. Webcam.
I'll just turn my screen share off.
Okay.
Okay, I can see it.
Yep. Okay.
You might just maximize your screen.
Yep. There we go. All right. So this is Lennar. And as I said, what we're interested in is what I call good news, bad action. And that's exactly what we got. So on, I think it was Tuesday, they came out with their results, gapped higher and a big reversal. It was a slam dunk signal, a pink square. And what I was waiting for was a close below the weekly relativity, and it just about did that. So that is an actionable short. And if I go to the actual home builders ETF, which is XHB, what we have there, if I just scroll that a little bit, the massive monthly level of 39.22, and it was the high to the tick. So that's music to my ears, basically. So that monthly level goes back a long way. I've just checked whether we closed below the weekly level, 38.27. And we were one tick below, so that's also confirmed, 38.26. Also, one of the other big parts of that ETF is DHI, and it's almost identical to Lennar and all those other things. So it gapped higher on the back of Lennar's results, closed below the monthly, didn't close below the weekly. So home builders is an actionable short. There's a few components. I'll probably be looking at some of the other ones as well. And DHI's, their results are not till the middle of July. So that was one of the ones that was particularly interesting. I'll just go back to my quote board and pick up the other ones. We'll do just do the JBHT, that's the one. So we had also hitting our watch list was the Dow Jones Transports, and I was looking at some components, and this is one of them. So Hunt, JBHT, I think we'd had a time continuation level just ahead of daily resistance. Then we've had a slam dunk sell, and we've got some support down here. If I do the actual index itself, just remove the range relativity. The monthly moved to the top, yeah. So this blue line has moved to the top, and then we've had a UFO and a time continuation. Then we had one. The red square is one of our stochastics ones. We sort of bounced back up again, but we're very interested in any sort of failure. And if I look at the ETFs, we've got IYT and spread that out a bit. We've got the same thing. The monthly went to the top, and we've had the same patterns. So transports is on our watch list. Didn't make a weekly close that was bearish, but we're monitoring that pretty closely. Just do Konoko, which is a long position. And I said a little bit earlier about how it was hanging in there from the point of view of compared to the oil price. So was pretty much unchanged on Friday. The line in the stand is still that monthly level, and now a weekly level that's formed as well. So it's still a long position, but obviously it's going to need the oil price to get a grip. So if oil can get over 45, then I would expect this stock to do pretty well. Just one that came up on a scan on Friday. So oil is actually, no, I forgot to do one thing, XOP, let's forget. So this is an ETF. There's quite a few, there's lots and lots of different oil ETFs. The thing I'm highlighting here is the fact that we got a time continuation buy. but only at daily support. That red line is daily, so I really need some black lines or blue lines to go underneath to get a bit more confident about it. And obviously 34.15 or 34.13 is the key level there. Looking at what's fashionable and what's unfashionable, we have a stock here called Arex, and I've spread this out. Well, first thing is to think of these levels all the way up here, so 950, 1330, 428, and it came up on Friday with a major buy signal. So that's a power play, pops, and a time continuation, all on the same bar. And look at the volume. Volume was absolutely astronomical, and most of that volume was towards the end of the day. There you go. Yeah, the last hour. Yeah. So something's going on that stock. I had a look at the background of it. There is some people who have been building a big stake in it, and they're almost close to their limit. Obviously, they can't have more than 50%, otherwise they'd have to take them over. I think they're up to 49, or they're probably right below it at 49.9. So I suppose rumours of takeover, whatever. There's a huge short interest in this stock as well. So if I was to go into, for example, if I go into MarketSmith, just load that up. This is where I get my information on sectors and a little bit of fundamental information. I did a lot of work on fundamentals and testing for about 3 years, and there's only a couple of things that I actually think are worthwhile in fundamentals, and I'll just quickly show you them. So the first thing really is the only thing that I'm interested in all the various lists they create is the industry groups. So it's 197. And all I do is I just click on the group rank and it will tell me what's at the bottom. So oil, auto parts, right down there, and energy and coal. And it also tells you where you were 6 months ago. So this was number 1 6 months ago, and now it's 194. So it shows you how things can change. If I just look at the top, telecom's still there, and then we've got computer gaming at number 2, was 112 6 months ago, and then computer software medical number 3, and that was a number 186 6 months ago. It's just a game of pass the parcel and an endless merry-go-round. That is what the stock market is all about. It's just fashion and what's not fashionable, and I don't really think there's any rhyme or reason or anything about valuations that dictate that. It's just the way it works. But very useful to know. Without this information, we don't know where our concentration of effort should be. I'll just do, so if I do Arex, type it in here. It's in oil and gas, so it's an unloved sector. The sector is number 190. Does generate income, which has been rising, so the sales are going up, but it's loss-making. Yeah, doesn't make any money. But its valuation is 245 million. It's not particularly high. Also tells me the short interest, so it's 10 days or 16% of the number of shares. So effectively, that means with shares 81 million, 16% of them are people who are short, which is pretty high. Yeah. So that was Arex. Just go back to my quote page. The other thing that was hit was a thing to do with good news, bad action. And I'm just going to do CCL, Carnival. I'm going to put the range relativity on there. They came out with their results on Thursday. We had a UFO just before, then we had another one on Thursday. So they beat in a big way. It was a very impressive set of results, there's no doubt about that. And again, price actually went down. If I call up the range relativity, I have slightly different colors to Jeremy. Red is annual, then blue is monthly, pink is quarterly, and you can see that the blue monthly and the weekly The weekly is above the monthly is above the quarterly, and the quarterly is above the annual and the semi-annual. So that is a setup for a reversal back the other way. So very much overdone. The results are out the way. We wanted to see a close below 65.29 on Friday, which we didn't get, but it's on our watch list in a big way. The other one major stock is Royal Caribbean in the same sector, RCL, and their results are mid-July. Pretty much identical in terms of its setup. It doesn't have a yearly level because it hasn't been in existence long enough, but again, we didn't close below the weekly level. So on our watch list as something that's very much overdone. Final thing I'm going to show you is just uranium. So there's an ETF called URA. It came up with a buy signal on Friday, fairly major one. This ETF hasn't been going for a huge number of years, so you only really get daily levels at present. Can see where we had previous buys. We had power play buys right down on the lows, and then we just exploded in various instances. A UFO and then another divergence-based pattern formed the top, and we've been sliding ever since. I checked the actual price of uranium itself. This is another uranium stock, UEC, and you can see that it's broken out. Yeah, so we went through the monthly level, taken out the daily, couldn't find a story. The actual price of uranium, if I just remember the code, which is a pretty horrible code, you just URA XPD. Let's just do that. So this is the price of uranium itself. It is priced in dollars. It has a correlation with the dollar, not surprisingly, because it is priced in dollars. And so the dollar index made its high in February, and then so does uranium. You can see that we got sells at the top, and it's sort of stabilized, but we need to get over this 225 level. So watching uranium, if it pulls back on that UEC, aggressive people can look to get involved. But we really need some evidence of the dollar bottoming as well. So there's a few things to look at there. It's on my watch list. I think I'll send it back to you. I think that's pretty much it from me.
All right, well, we'll probably wrap it up there. Shaun, do you just want to jump on the internet and go to our website, www.tradingsafely.com.au?
Yep, can do.
Just for anyone that wants to get involved with our subscriptions, if you go to our website, www.tradingsafely.com.au, and just go to the subscriptions tab. We've got 4 different subscriptions that cater for everyone. We've got a basic subscription that enables you to get access to our Slack community, and in that you'll get access to 10 major markets, so Euro, Pound, Aussie, Fang, Dow, Oil, Aussie 200, and you'll get access to all the help videos, and there's the chat room, and it's a really great environment, all for $59 a month, and you can go right through to the Platinum Plus plan, where you get you get the 10 major markets plus a bunch of bonus markets: sugar, wheat, corn, soybeans, nat gas, 30 years, silver and copper. We look at yearly forecasts. There's a whole bunch of things in there. You even get access to the Chart IQ based Trading Safely software, so you get the actual software itself, and you get access to all our sector analysis and track our trades. It's a pretty complete package. So there is a package there for everyone. All price ranges are there, so that's where you want to, if you want to get involved, then you can. So that's, yeah, Shaun's just calling up the Chart IQ platform there, and we've got a Trading Safely drop.
That's what it looks like. So you can see this is RX, so it's giving the same signals. There was actually 3 buys on there, so it's got that time continuation, power play, and pops. And the additional thing you get there is the actual system, the Trading Safely system, so if I switch everything else off, it'll become a little bit. So it'll produce triangles whenever a trade is due, and when it produces a number, it's telling you to take profits on 25% of your position. So it's pretty easy to get set up for that.
Yeah. So look, a free trial is available on the ChartIQ Trading Safely software. Just sing out in the Slack chat room if you would like a trial of the ChartIQ software, and we can arrange that for you. The ChartIQ itself is a free platform. There's daily data and above, and we're happy to give you a free trial of that. So Shaun's just opening up our Slack community platform there, and you can see on the left-hand side where all the channels are. We cover many markets, and we put in key levels and things to look out for, and our views. Okay, so that's it, guys. Have a great week. Thank you very much for listening in tonight, and we'll look forward to seeing you in the chat room.
Okay. Yep. Okay. See you everyone next week.
Cheers, Shaun.
Okay. Cheers. I'm just making sure I can switch this off. Am I?
I can do it here.
I think you'll have to do it.